Still, we are seeing supply at higher levels. In the past 1 hour or so, Power Grid, obviously, that's the stock that's seen a bit of an uptake. And Ultratech Cement as well. From the day's low, remember, that's been under some pressure on fears that now you have a larger competitor that's coming into the markets. Well, Ultratech Cement as well has recovered a goodish bit from the low point of the day. On the day that the Nifty is down more than 230 points, you have a stock that's up 1.5%. I guess as there is some bottom fishing out there. But let's focus on the money markets. The rupee has fallen to a fresh low, while the 10-year yield has touched the highest we've seen in the past 3 months. Lata joins in to run us through more details on that front. Lata?
Clearly, the pound going to a fresh 37-year low and those unexpected tax cuts was the fresh negative over the weekend. Dollar going to 114 and US yields at 3.79 on the 10-year and 4.2 on the 2-year. These large global funds, for them, it immediately means taking off money from EM currencies because the risk-free return is coming in at 4.2 in the 2-year. There's no currency risk over there. And here, the interest rates are not matching, more because of the losses on the currencies. And of course, all Asian currencies saw that impact. And the NDF market already moved over the weekend. So early morning, we were merely correcting to all this. Dealers tell us that it isn't as if FIIs have come in and bought dollars because they have sold off shares, nor is it that importers are coming and panicking and buying because they may not get at 81, they have to pay 82. Nothing like that. It's not real economy moves. It's clearly these large funds which move across countries which have been responsible for the recent fall. They'll really watch RBI, and RBI will be watching the funds, actually. If there is exit from the market, then the Reserve Bank perhaps will let go a little bit more. Because beyond a point, when the reserves start going 550, 525, billion dollars, there is also a psychological impact. Depreciation begets depreciation. The market is now only watching RBI to find out where RBI puts the next big stop. And then perhaps exporters will come and sell. They usually do sell, actually, in the last week of the month. So now everyone's believing that there perhaps will be a catching of the breath between 81.5 and 82. But of course, global factors can have a different design. The bond markets also bear watching. Like I told you, the big movement is actually the yield movement. This 3.79 on the 10-year in the US and 4.2 on its 2-year has led to Indian bond yields being yanked up, despite the fact that crude is actually to our advantage. Now, the OIS market, overnight index swap market, it's a very swift market. That one is already priced to 50 basis hike, and a 50 basis hike on a Friday, that is. And if you look at the 1-year OIS, it is pricing in something like 6.9, 6.95, which means, a repo of a peak rate of even 6.75 in keeping with the higher Fed rate is getting priced in by the market. All these are, of course, position taking. We have to wait and see. But from a stock market angle, what you need to know is now the 10-year yield, as we approach September 30, is higher than what it was on June 30th. So banks, while they were benefiting from the upper interest rate cycle, are now sitting on mark-to-market losses. That is the big thing every bond desk tells us. Oh, we are sitting on losses when it comes to the quarter. So that's something of interest to the markets.
Okay, thanks.